Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, it's good to be back.
John, last week you talked about Novo resuming work in the Pilbara on the Comet Well project. What about Novo's partner at Purdy's Reward, Artemis Resources? Is it roadkill as Novo shifts its focus to 80% owned Comet Well?
Well, Jim, it sort of looked like that with Novo starting a major program on Comet Well, in which Artemis has no interest. But in the past couple of weeks, Artemis has come through with a couple of important developments which will allow it to drive its own story without any real input from Novo. They will be able to start work right away on the 70% Elysian properties they acquired last November. Two of them it's basically two groups. One is to the west of the Comet Well property, which itself is to the west of the Purdy's Reward property, and it covers the edge of the Fortescue Basin where this pre-Mount Roe conglomerate unit that hosts these gold nuggets daylights. So they'll be able to start moving west, basically following that whole trend. But more importantly is 47 Patch, which is an island of conglomerate capped by Mount Roe basalt to the north of the Comet Well area. And 47 Patch is famous because fossickers have dragged a lot of gold nuggets out from the edge of this conglomerate unit. So Artemis has also received approval to process a 4,500 ton bulk sample through its Radio Hill plant, where it has installed an 80 ton per hour gravity plant to recover the gold. So their goal is to go into the 47 Patch area, excavate the bedrock conglomerate unit. Keep in mind that all the fossicker activity is in the more broken up, loose material at the edge of this conglomerate unit, and then run it through the radio plant mill. So they will, in the next couple of months, also be able to tell us what sort of gold grade they're getting from a fairly good-sized sample in one of these islands that are literally sitting to the north of the Fortescue Basin edge. And Novo has also staked a whole bunch of similar properties between the coastline and where these conglomerate units daylight. So this will also have positive implications for Novo's holdings, which it has 100% to the north. Now, the other thing that Artemis is embarking on is it plans to drill a 3,300 meter plus deep hole on what it calls the Balmoral property. These are two sort of squarish blocks about 50, 60 kilometers south of the Comet Well area. And they are part of the 50-50 joint venture with Novo, though Novo only has rights to any conglomerate hosted gold, not any other types of deposits. This block has some kimberlite dikes and pipes, apparently very low grade. It also has some leftover VTEM targets that could be base metal systems. But the real purpose of this is to basically to map the stratigraphy of the Fortescue Basin 50 kilometers south of Comet Well and about 10 kilometers to the northwest of that 1984 hole CRA drilled to a depth about 2,200 meters, and at 1,756 meters, they managed to clip a half meter of 15 gram per ton gold within a quartz pebble unit, the kind of stuff you would expect, what everybody was always looking for, and what characterizes the WITS 1.0 system in South Africa. So this is going to be very, very interesting. It looks like it'll probably be done with on Artemis's dime. And Cicero, which is the Australian government R&D entity that also supports the mining industry, it will also be part of this. So this is almost Artemis moving into the camp of the science guys who want to understand what is really going on way back, way deep down at the base of the Fortescue unit at the interface with the basement. The CRA hole was drilled to about 2,200 meters, and they believed they were into basement, but there was some uncertainty. They did go through some sort of immature conglomerate that looked like the pre-Mount Roe conglomerate, but again, nobody is really quite sure what it is. This hole will go all the way into basement. Obviously, if they do plan to drill at 3,300 meters, it may go quite a bit into the basement, but it'll give a very good picture of what goes on. And of course, the big question that I've brought up in a session a week or so ago is, did the explorers 20, 30 years ago limit their search to the Hardy Formation, which sits between the Kailina and the Mount Roe basalt, flood basalts? And was that perhaps too young a formation that maybe they should have gone deeper? What's going on beneath the Mount Roe, which is now emerging as the equivalent to the Venterstorp cap that pretty much signals the end of the WITS 1.0 gold reefs in South Africa? So now we will have news coming on 3 fronts. Anytime we should get the first of the 5,000-ton samples excavated in December from the Purdy's Reward conglomerate that is being processed at the SGS facility. Soon we should start getting the 5-ton samples from the Comet Well project where Novo is operating, and then eventually we will get results for a 4,500-ton sample, which is a very large sample, run through the radial plant from the 47 patch project to the north of the Comet Well Purdy's Reward area.
John, FPX Nickel published an updated resource estimate for Dakar last week. Did Dakar get better, and what happens next?
The drilling that the FPX Nickel did last year in the so-called southeast extension of the Baptiste zone, it did find the limits of that. It did add tonnage. This tonnage is of the higher grade level. So they have just published a new indicated and inferred resource. It totals 2.2 billion tons of about 0.122% Davis tube nickel, which means that it's recoverable through simple gravity and magnetic separation techniques. That's about $16 per ton at the $6 price. That starts getting possibly interesting. Then the mountain in the nickel warehouse has started to come down a bit. The company is in the midst of an internal study to see if what sort of price it will be needed to support a mining operation here. The Cliffs PEA done in 2014, it assumed a $9 price, and it's always looked like we need something between $6 and $8 a pound for nickel for this to be viable. This particular style of nickel would not really compete with the nickel sulfate market needed for battery, because it would end up being mixed with magnetite and be almost a direct feed for making stainless steel, not battery grade cathode material. So the company will decide probably by May, which is also when the season can start again, whether or not to proceed with a pre-feasibility study, which will probably end up costing $10 million. But they may spend the summer marching north about 6 kilometers to the Van target, which they had found back in 2010 when they initially started exploring this whole Dakar project, but ended up focusing on the Baptiste zone. There was a lot of tree cover up there. Well, since then, the loggers have clear-cut the area and exposed it. They've gone back in there and seen that the alloy grains are coarser than they are in the Baptiste zone, and also it starts getting up to 0.16%. So they're going to go in there with a small drill program to collect some, three-dimensional numbers and see if this is potentially a higher grade starting area than the Baptiste. So several things to watch for is will the nickel price hold above $6 and build a base somewhere between $6 and $8 per pound? Will their internal market study give them the green light? Yes, we can, so long as nickel is at $6 or better, we have something that's potentially viable. And even failing that, they will go up there and assess the Van target, because that has the potential to deliver a 25% boost to the rock value. If we get this into the $20-25 per ton range, then $6 nickel, which is probably a good long-term assumption, then this project starts looking very interesting.
We'll have more with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Ivanhoe Mines updated its Kakula project in Congo, and the stock for the copper company started to recover. Is this increase enough to overcome the gloom about Congo's proposed mining tax?
The Kakula deposit just keeps getting better and better. It is such an amazing discovery. They reported indicated and inferred resources at a 1% cutoff, about almost 700 million tons at about a 2.8% copper grade. At the current copper price of about $3.11, that's about $190 rock value. It's a total of $132 billion in just this Kakula zone itself. And then, of course, they have the Kamoa project, which is a bit lower grade, just to the northeast. This project will eventually get developed. From the latest that I've heard, Kabila still has not signed that new mining law. There are discussions as to, it's fine if you want to change the mining regime, but you have to give the companies that have been working there already time to adapt to it. You have to cut them some slack. I suspect something will end up being worked out, and this project definitely is looking better and better all the time. And of course, it does not have any cobalt in it. This past week, the electric vehicle market got a boost when a German court ruled that cities have the right to ban diesel cars from the city limits. Diesel cars have already been, demand for them have been starting to decline. That's not particularly good news for platinum, which is one of Ivanhoe's other products. The Platreef mine in South Africa produces platinum, and the general uncertainty about the Congo, I believe it will eventually pass, and the German car makers and others are all now scrambling to nail down cobalt supply, because it still is a critical part of the lithium-ion battery, with talk about achieving 10% penetration of the car market by 2025. The lithium problem seems to be in the process of being solved by new hard rock supply coming on stream from Australia. And in Chile, there is the quotas are being lifted so that the big groups like SQM can expand output there. And of course, there are brine projects in Argentina that are also in the process of coming on stream. But cobalt is still a critical vulnerability for the electric vehicle car makers, and they need to either get the Congo stabilized and take advantage of the enormous cobalt resources that are there, or they need to go look elsewhere in a jurisdiction where they do not have this political instability that we see in the Congo.
Ivanhoe Mines used to own a nickel cobalt project in Australia called Syerston, which it gave to an Australian company called Cleantech a few years ago for a few shares and a royalty. It turns out that Kakula does not have any cobalt, and since then Cleantech has achieved a valuation of nearly $1 billion based on the cobalt potential. Did Robert Friedland make a mistake?
Robert Friedland does not make mistakes. He's been promoting the green metals concept for some time, and while his primary focus has been on copper as the key ingredient of the electrification of the car industry, and he's also been cheering for hydrogen fuel cells, which would use platinum and possibly palladium if that ever got off the road. But the problem with the nickel cobalt resource in the Syerston project is that it has complex metallurgy, and the company in which he had acquired a stake, Cleantech, he had done this because he saw this as a vehicle for branching out into sort of environmental services business, in particular using this technology to clean industrial wastewater in places like China where there's a significant need to get this done. So he saw that, well, without this particular technology, this project is of no value within Ivanhoe, so it's now inside Cleantech, and they just got a mining lease to develop a 2.5 million ton per year operation mining the nickel cobalt. That's about 7,000 tons per day. The mining lease means that as soon as they have their feasibility study done and the money in place, they can start building this mine. But they also put out news that they have postponed the delivery of the definitive feasibility study for another 12 weeks. It's now expected in sort of late June of this year. And there have been rumblings coming out of Australia that the original $1 billion capex cost for this operation has undergone a substantial bump. And if you read between the lines of the latest press release that talks about this, there's all kinds of talk about, reviewing this and optimizing and getting savings and so on. So they've bought themselves 3 months of time to basically try and get this capex down to a level that allows the assumptions for the cobalt price and the nickel price to make this thing worth developing. And of course, this creates a bit of a problem for between Ivanhoe and Cleantech, because bad news for the Congo and the mining industry is bad news for people counting on the Congo to get their cobalt. But it could end up pushing cobalt up to $60, and at $60 a pound, and with nickel finally improving to $6 a pound or better, the Sunrise project, as Syerston is now called, would end up being in the money. So it's a question now in the next 3 months: are we going to see the capex get trimmed back to something that allows a lower cobalt price to be viable, or are we going to see cobalt prices settle higher and the industry accept some sort of range as $40 to $60 a pound to be the long-term price to build your lithium-ion batteries?
We'll have more with John Kaiser right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Kaiser. John, if the Congo remains an unreliable supplier of cobalt and nickel cobalt laterite projects such as Sunrise prove to be too expensive as a counterbalance, where are the car makers going to secure their long-term cobalt supply if the lithium-ion battery remains the dominant technology for electric cars?
This week, one of my bottom fish companies, Namibia Rare Earths, it resumed trading after a more than 3-month halt since mid-November for the acquisition of a project in Namibia, in fact, a whole portfolio of projects, which they acquired from a group, Gecko Namibia, which operates mines and processing facilities, a real company in Namibia, and it has a sister company called Jeanette, which is in South Africa. So they issued 64 million shares to this company to acquire this portfolio. And one of the projects is the Kunene project. And this is a new Discovery Watch story. It is a property that's to the west of another property called Opuwu, which is owned by Celsius Resources. Now, this project was originally generated by a geologist called Rainer Elmies, who ended up optioning it to First Quantum, which between 2012 and 2014 spent about $2 million in an area about 100 kilometers by 25 kilometers, which they believed was an extension of the Central African copper belt. And what, of course, they were looking for was this 2% plus copper mineralization, what, Kamoa Kakula is all about. And they did a big regional survey of sort of on 1 kilometer spacing, collecting samples, and got a whole bunch of copper values and some cobalt values. They weren't particularly interested in the cobalt, but they did some drilling on the copper, but only came up with these half percent copper values over widths that weren't substantial. And they basically concluded, well, whatever this is, it's not copper belt style sediment hosted copper mineralization. It doesn't have the grades that we're looking for. So they walked away. Rainer Elmies got the project back. It ended up inside Gecko Namibia. And then in 2016, as the whole sort of cobalt story started to gain momentum, the Australian listed company Celsius Resources optioned 76%, and then recently increased it to 95% to make Gecko Namibia the largest shareholder. And it has been busy on a major drill program. It sees a target of 30 to 40 million tons. The grades they've been getting are sort of around 0.5% copper, but the cobalt grades have been 0.1 to 0.15%. And this is within a shale, a sulfidic shale bed that's about 5 to 10, sometimes 15 meters thick. It repeats itself several times. They're focused on the area where they are, where it daylights. And we should be getting a resource estimate from them, any time soon, maybe even during PDAC work. And what everybody's going to be looking for is, do we have grades towards 0.15% cobalt, and that's about $150 worth of cobalt, and of course the 0.5% copper, that's only sort of $20 to $40. So this would be a primary cobalt system, and they're only looking at a small segment. They have about 100 kilometers equivalent of this daylighting bed. Because it sort of dips 30 to 45 degrees, it's going to have a nasty strip, and you probably will not be able to chase it underground for underground mining. But it is potentially has better metallurgy than these laterite, nickel cobalt laterite deposits that everybody's looking at in Africa and in Australia. This type of system seems to have been hydrothermally driven rather than through tropical weathering and metamorphic processes. So the initial metallurgical work suggests this can be floated. It only produces a concentrate of 1.5% cobalt, which means you still have to ship an awful lot of concentrate for smelting. They are looking at perhaps developing an autoclave on site for this. So what the Namibia Rare Earths just acquired is the western half of this system, where there are a lot of cobalt and copper values in the soil sampling survey done by First Quantum, but the zones themselves, these shale beds, do not daylight. But based on the general geology, it is projected that they extend of a similar sort of 50 kilometers and probably repeating themselves. Furthermore, Rainer Elmies believes that this area to the west was the hydrothermal center for the whole system, and they're now in the process of going in there and there's about 12,000 soil samples that First Quantum collected on a 100-meter spacing. They only shot these with an XRF gun, and because of the iron in the system, the cobalt values are not reliable, the copper values are reliable. So Namibia Rare Earths is now doing ICP assays on that to create a map of what is the distribution of reliable cobalt values for this. They're also going to do an EM survey because of the conductivity of the pyrite in the shale beds to identify where exactly are the folds in these shale beds, where are they likely to daylight underneath the overburden that's in this area, and then they'll mount a drill program to assess to see if they have something similar to what Celsius has to the east. And because of the large scale of this and the location in Namibia, this is a very important play for all these electric vehicle makers as an alternative supply of cobalt in a jurisdiction that doesn't have the problems. Obviously, if Katanga has a 3% copper and 0.5% cobalt, it could supply all of the world's needs from the Congo if the place became stable. But if there is going to be a problem in the Congo, something like a source like this from Namibia would be very important. And Namibia Rare Earths has woken up. It's trading in that 15 to 20 cent range. They also have the Loftall heavy rare earth deposit. They're still waiting to get the mining lease, which is not the same thing as approval to mine, but it cements title so that they can start proceeding with more advanced work. The rare earth prices are still too low for for this deposit to be developed. But with this trade war that's being started by Donald Trump targeting China, there's a very good chance that we will see again something like 2010 to 2011, where we saw the export prices go up substantially because all of a sudden there are no more rare earths available for the rest of the world. And all the hype these days for the electric vehicle industry goes into the lithium. Where is the lithium going to come from? Where is the cobalt going to come from? But these electric vehicles also still require the neomagnets, which require neodymium, which is, can come from a variety of light rare earth dominated carbonatites. But the dysprosium, which is key to keeping the neomagnets from losing their magnetism under high temperature conditions, it only comes from these heavy rare earth deposits, and China absolutely dominates them. And the Lofdal is one of a handful of these types of heavy rare earth deposits that could supply all this dysprosium if a trade war spins out of control, and all of a sudden the hopes for electric vehicles go down the toilet because they can't make the neomagnets needed to power these cars.
Cedillo Resources is a Discovery Watch junior because of its BK16 diamond project, which it hopes will be somewhat smaller version of Lucara's very successful mine in Botswana, which produces very large and valuable Type 2A diamonds. But Cedillo also had a joint venture with First Quantum on its Zadam project, which was supposed to be a Central African Copperbelt style story. Was that also a bust?
First Quantum had two major copper exploration, grassroots copper exploration programs going in that period, 2010 to 2015. The one with Cedillo, what they call the Caudum, in the northern part to the west of the Okavango swamp, this one they spent $15 million, and we're probably less than $1 million away from vesting. But because metal prices had collapsed and the analysts and the institutions were all screaming to cut costs, they decided to just pull the plug on this without drilling the targets that they had generated through very systematic exploration work. That most of that $15 million did not go into drilling. What they did drill in the final stretch was not the best area. So the Caudum project is still sitting there inside Cedillo, waiting for another big company to come in there, option it, and see if there is this 2% plus copper belt style mineralization there. Various groups have looked at it, but so far no deal. But it is something that could turn out to be a huge discovery story for Cedillo. It's on hold now. The focus is now on the BK16 pipe, which is a smaller version of Lucara's Caro pipe, and they have now started processing the bulk sample. They've managed to reduce the original 2,500 to 1,400 tons by removing the worthless cover portion of it, based on their detailed analysis of the logging what it is that they have there with the cover rock and then the kimberlite itself. And they've also got the fines out of it that are not going to carry any diamonds. So they've got about 28% of this 1,400 ton sample run through the DMS plant. The barrels are shipped off, awaiting sorting. It's been reduced to what they have so far has been reduced to about 1,400 kilos of concentrates. The question is, are there Type 2A diamonds in there? And that is, of course, what makes Caro work. And in the past week, we also had an important new development at Lucara. William Lamb has decided to retire as CEO, and his replacement will be Ira Thomas, whose last stint was with Kaminak, which got bought for about $500 million in 2016 by Goldcorp. She's been sort of in semi-retirement, but she is the diamond queen of the industry. She was there with Aber when it discovered the Diavik pipes, and she was also with her friend Catherine McLeod Seltzer. She was one of the founding shareholders of Lucara, though building of Lucara into the Caro and all that was largely done by Lucas Lundin. With her coming on board, we may finally have in the sort of among the Canadian listing, a company that is a potential aggregator of the diamond industry. We'd always hoped that Aber, which became Harry Winston and then Dominion Diamond, and now has disappeared as a private company, would become that aggregator, but it never happened. Ira Thomas lives and breathes diamonds. She also is very well connected to the financial sector, and I would suggest that Lucara, which is now shifting towards underground mining of the Carol, if they want to grow this into a bigger company, they will probably look at other projects as potentially good news for Peregrine Diamonds, which the Chiliac project. I could imagine that at some point that might be acquired by Lucara, but also Cedillo itself. If the BK16 does indeed deliver the Type 2A diamonds and gives us a grade of 15 carats per 100 ton or better, Lucara is already a shareholder in that. I put up part of that $6 million they raised over a year ago, and this would, of course, they already have the facility there to process kimberlite material that has very large stones, which have to be handled very carefully in order not to break these large stones. So Cedillo, next couple of months, we'll know whether they have the goods. They have some preliminary evidence that Type 2A diamonds are there, but this bulk sample is going to tell us to what extent they are there and what the grade is going to be, whether it's higher than that 3 to 5 carats per 100 ton that was assumed by the initial bulk samples done 10, 20 years ago.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.